Hello, investors. Today on Stocks to Watch, I'm joined by John Feneck, founder of Feneck Consulting and portfolio manager of the Feneck Metals and Mining Portfolio. John is known for his deep expertise across precious metals, critical minerals, and mining equities, particularly for uncovering under the radar opportunities that often outperform well before they even become household names. Also, I want to mention that we are recording this conversation at a particularly meaningful moment, just 2 weeks ahead of the 10th anniversary of the Feneck Metals and Mining Portfolio. That kind of longevity is in a notoriously volatile sector is really rare, and it gives John a unique perspective on cycles, risk management, and really where opportunity may lie next. So without further ado, I'd like to welcome you, John, to the show. Always great to have you on.
Thanks a lot, Ashley. Always great to be here.
Yeah, so, how difficult is it really to build and maintain a 10-year track record in metals and mining? And can you talk a little bit about the discipline and approach that's allowed you to really generate consistency, consistent, solid performance over such a long period of time?
Sure, yeah. Well, since the 90s, I always wanted to be a portfolio manager when I worked at Merrill Lynch or Blackrock or JP Morgan. And the answer was always get your CFA, which is called the Chartered Financial Analyst designation, and we'll talk. And that's it. Back then, it was a 3-year exam, and then it became a 2-year exam. It might be more compressed now, but I don't have 2 or 3 years to put my nose in a book at this point in my life. And I always was like pushing back, saying, "Hey, I can do this. I don't need a designation to feel good about what I can contribute to a team." Sprott, in hats off to Eric Sprott, he was the first person to give me a shot in 2016 to do this without having that designation, and I became part of his silver team. And we were up over 100% the year that I was there. And it was a great experience because we all brought different things to the table. But I concurrently started my own portfolio alongside of that, family money, my money, et cetera. And that's the portfolio track record that you see online. And it's been a long, arduous journey because as you pointed out, Ashley, the sector is extremely volatile. This is not for everyone. It takes a lot of courage to get through certain parts of the cycle, like 2022, 23, 24 were brutal, kind of up and down periods of time. And if you look at the rally we're seeing now in mining stocks, it actually started in the fall of 2022, which, if you look at GDX, the symbol as a proxy for our sector, it bottomed out there, and in COVID, of course, in 2020. But so for us, this isn't something new. It's just that GDX made all-time highs this year, is getting some headlines. Gold making all-time highs, silver now making an all-time high literally last week as we speak here. So everything is starting to move in the right direction concurrently, and investors should be pretty excited about that. So in closing, like, I think it's just it takes a certain type of person that's willing to get up every single day and put the time in this sector. It's not like technology where over the last 10 years you could throw darts and do reasonably well.
Well, I think, hey, kudos to you, doing an amazing job. And, speaking of gold, we're seeing major global banks turn increasingly positive on gold looking out to 2026. So let's talk to the investor audience. How should they be thinking about gold at these levels right now? And personally, how are you positioning or playing gold in this environment right now? Before we continue, be sure to subscribe to our channel and ring the bell to get notified about our latest videos.
Yeah, so we've been underweight physical gold for a while now in favor of gold equities. So I get a hard time for that sometimes, in the comments, because I know a lot of watchers like the physical, and I get it. I'm early 50s, like I'm not in my 60s, 70s, 80s where I might need more physical, and I would increase that allocation as I got older because you want to take more risk off the table, right? But right now I'm like, this is the time you go for it. These gold stocks are so cheap compared to where gold is, right? Like, I'll give you an example. So Triumph Gold, TIGCF in the States, TIG in Canada. The stock exploded recently on the fact that they did a $2 million financing. Like, the stock was sort of just forgotten, it seemed. And a stock like that, A, hasn't put out news regularly in 2 or 3 years, and B, hasn't raised money since this spring. But before that, it was like a couple of years. So
Mm,
they haven't had the capital to update their most recent, what's called a PEA, Ashley, which is an important like milestone in a mining company's trajectory. Which means that in the last 13 years, the market doesn't know what they actually have in terms of value because they haven't updated the resource estimate, right? So it's like, is it their fault? No. I mean, John deliberately didn't raise money to dilute shareholders in a time when he didn't think it was time to go for it, but he clearly thinks it is now, and you can see that reflected in the stock. So we look for opportunities like that are flying under the radar, and we vetted that literally from a proactive call from me. Like I saw their website, I was referred to the name by someone, and I'm like, well, why isn't this company putting out news? And he just explained, hey, we mothballed it for a couple of years because we wanted to make sure we kept the share structure intact. And so, like, sometimes the chart doesn't tell you everything. You need to do the fundamental work as well.
mm,
But to answer your question, gold's here between 42 and 4,300 right now. Banks are, with the exception of Citi, which is somehow talking 2,500 to 2,700 by June of next year, which is hilarious to me. When you look at JP Morgan, Morgan Stanley, Goldman, all the big boys are at 4,500 to 5,000 an ounce
mm.
sometime next year. So that implies some upside in the gold price, right? And gold equities would rip at 4,500 to 5,000 gold. I have no doubt, and what I also think is positive for gold equities is what we call a sector rotation, actually, out of traditional stuff, meaning like technology, healthcare, whatever, and into a sector like ours where people are like, wow, I missed physical gold, but how do I play this through equities? I get that question a lot in the last like 3 months from people that I haven't talked to in years. Like I just showed you as we were setting up to record this, I'm getting a call from a client from a couple of years ago as we were ready to hit set, go. And people are like, hey, I want to come back to what you were doing. I see what's happening in the charts and what you were talking about now. So it's an exciting time, but just buying physical isn't enough. You have to buy equities to get the exposure that you need to gold.
Yeah, I think that those are incredible insights. And, I know that silver, you're big on silver. So speaking of
Mm.
phone calls and hearing from folks, years later, look at silver right now. It's also at an
Yeah.
all-time high, so, but
Yeah.
also, investors have noticed that the silver equity ETFs aren't really showing that traditional 2 or 3 times leverage relative to the metal. So what do you
Yeah.
think is driving that? And what would you recommend investors do in this case, especially in the silver equity space with silver at these prices?
So yeah, great observation there. Silver right now, when you look at the ETF world, SLV is the tracker for silver that has the most assets in it. A lot of people don't want to buy an ETF like SLV or GLD because you're buying paper ETFs, right? You're not buying the actual physical, and I totally get that. Silver for us is a 16% weighting as of yesterday. We haven't sold an ounce of our physical silver, and believe me, every day I wake up and I'm like, one finger on the sell button just in case, because I know how silver is. It is extremely volatile, and so yes, this has been a sharp line up. But I think some of this lineup is probably short covering, and then follow through buying, right? And you're seeing a lot of reports from smart people that talk about massive consumption in China, India. Big players are buying a lot of silver and control a lot of silver. And so that's concerning, yeah, as well, because these guys are part of the BRICS, right? And the BRICS just literally put out a currency to compete with the US dollar, which is backed heavily by gold. So there's a
Mm,
lot of stuff going on behind the scenes. But to your point, there's three silver equity ETFs that people can look at out there. SIL is one. That's the large cap. Another large cap name, which has a little less volume, is SLVP. And then lastly, SILJ is sort of the equivalent to GDXJ, one being silver and one being gold. Those three equity ETFs have done extremely well. Like they have done well, but like you said, they're not producing that outsized leverage to the silver move. For example, a couple of days ago, silver was up 3%, and those ETFs were up like 1 to 2% each. And you're like, why isn't it up as much as the move in the metal at least? Right? I'm taking all
Right.
this risk in equities. Why am I not getting paid for that risk? And that's the argument that I have and some others have, is that you want to see those things really break out. And we're close to that happening possibly next year, because this move in silver is coming at an awkward time, right? It's 10 days before 9 days before Christmas. So it's like, some people are not really paying attention, but I think you're going to see a lot more attention to silver and silver equities next year. What suggestion might be for your listeners is to buy stuff that is not in those ETFs, right? So those ETFs are just going to encompass the producers, both large and small. They're not going to encompass like development plays or exploration plays. So a development play that we just really like right now is Blackrock Silver, which is BKRRF in the States. I just talked to Andrew, and they have 108 million ounces of silver equivalent in Nevada,
Wow.
but their cost of like what their actual silver is in the ground is under $2 an ounce. So when people look at that, they say, "Hey, why would that be? Why is $60 plus silver happening, and these guys are being priced that low?" Well, it's just inefficiencies of markets, and you can't just flip a switch and get that metal out of the ground, right? It takes years
Mhm.
to develop it and permit it and do all the things that are needed. So that's why there's a hefty discount. But $2, or it's actually about $1.70 by my math, is extremely low compared to where it should be priced. And so we call that a re-rating, actually, where companies will get re-rated in a hot market for whatever that commodity is. And I think BlackRock at 61 cents is going to start seeing some re-rating next year, because Nevada is the number one jurisdiction in the world. It's like
Mhm.
these guys are going to be possibly construction decision ready in 18 months. Like, this isn't a long time to wait. So the other point I want to make is the Trump administration, of course, is helping miners in the States, right?
Yeah.
This is one of the only silver companies I can find that's going to be getting any love from that help within the next couple of years. A lot of them are 3 to 5 years out. So these guys are within 18 months, and that's what I think the market's missing.
And prime real estate there, obviously, in Nevada. So you've given us some teasers. You're well known for identifying stocks that aren't yet household names, but sometimes go on to significantly outperform. So, can you talk about a few stocks or themes currently on your radar right now, John, and what you're seeing that you really think the broader market may be missing?
Just not focusing on any one commodity. I met it, I go to I go to conferences, and Beaver Creek is one that I love. That's in Colorado every September. And I met Rob, the CEO of Rua Gold there. And I had never even heard of this story. And again, I, can only track so many companies, own so many companies. But it's a really interesting story. So the ticker is NZAUF in the States and RUA in Canada. They're in New Zealand 100%. And when you look at where they're positioned, there's another major company out there called Oceana Gold, which is OCANF. And if you take a look at that chart, I mean, that stock has just exploded higher.
Mm.
And they don't just have New Zealand exposure. That stock has other mines in the world, to be fair. But like, this little junior is right near Oceana. And that's the kind of stuff we look for. You know, like, you have the money to drill, you are going to put out the drill results, you're in the right commodities. We love gold, we love antimony. That's what they focus on. And I think, you're going to see some news flow out of them based on what they're saying, in public presentations or interviews. They're saying, hey, we're going to come out with news here December, January. So like, that's the kind of stuff that we're looking at breaking out here. We wrote it up at 83 cents recently. It's trading around 94 cents right now because it was ready to break out. So we have a real-time email service, actually, that we use with customers, and we say, hey, look, that email was entitled breakouts. It's not like I'm trying to fool anyone. It's pretty straightforward. And we try to show people that may not be paying attention to the chart that this thing is on the cusp of a breakout or a breakdown. So we recently highlighted Power Metallic PNPNF in the States and PNPN in Canada as a breakdown candidate. And not because I dislike the stock. I actually really like the stock. It's just that we let people know, hey, this thing's about to approach support. And if it breaks support, it's going to go lower, and approach this support level. So Terry is a great CEO. I don't understand why the stock is priced here, and clearly neither does he, because he just bought 304,000 shares, it looks like, in the open market December 10th. So again, like last week. And the stock has fallen from where he bought it. So that's not the only reason to buy any stock, of course. But what I like about the stock is that they have Rob McEwen, a billionaire, Robert Friedland, a billionaire from Ivanhoe fame, and big backers like that backing the stock on every time they raise money. Like, these guys can do other things with their money. Trust me. Like, they see the opportunity.
Mm-hmm.
And I think what Terry's doing differently is he's just hitting massive copper hits. I mean, like, massive. So if copper goes from 5-ish to 6-ish, a pound, this stock will get a lot of love, because copper has been all over the place this year. If you remember earlier this year with what happened with the Trump administration with copper and then pulling the rug, like, the chart looks very erratic. But that's the opportunity, is you have to talk to CEOs like Terry to get the straight shoot, or just go to like a website like Cedar and see that he's buying in the open market alongside us as shareholders, which I think is bullish. And lastly, I'll just mention, I've mentioned this one on your show before at much lower prices, but I still think it's a value, and that's Guardian Metal, which is GMTLF in the States, and it doesn't have a Canadian ticker, but it's in London at GMET.L. Right now, you're at a $1.45, $1.44 as we record this, so it's right on the cusp of breaking out or breaking down. So I don't know what that's going to look like, but my bet is higher, because the company is cashed up. Like, in July, they raised 21 million bucks. And Stan Druckenmiller, another billionaire who is not just a mining billionaire, but a generalist investor, is 15% owner of the company in terms of shares. So, we love to see that, Ashley, where you have a big player like McEwen, Friedland, Druckenmiller tying up a lot of shares in a stock, because these guys aren't selling. That's what the average investor doesn't understand. Why would a billionaire be worried about a stock going from $1.30 to $1.50? They're looking at $3, right? Like, they're looking for 1 to 2x multiples on their money. That's what I watch Shark Tank all the time, and that's what Kevin O'Leary talks about all the time. Like, I can't get out of bed for 5% or 10%, right? It's like, you need to make money. That's the whole idea of investing, and billionaires are pretty sharp people usually. So, they're putting their money into a thing with the idea that this is going to be a 1 to 3 year play, as opposed to 1 to 3 month play.
And John, I just want to ask you, you mentioned the email service, and, for those investors, maybe they're just being introduced to you, or just starting out, how can they get more information about how to get in contact with you and your company?
Yeah, it's feneckconsulting.com. We have 3 services. One is the real-time email service I talked about. I think that's extremely valuable. I'm biased, but we're the only one in the US doing this. Like, there's no one else in the mining space that is literally putting out news as it happens. So, like, to give you an example, this morning, non-farm payrolls came out. Huge news, right? Because of the US government shutdown, we haven't had an idea of what the employment numbers were going to look like. Well, unemployment ticked up from 4.4 to 4.6%. Jerome Powell, who runs the Fed, last week just said, hey, I think it's going to moderate at 4.4, maybe 4.5. Well, he was wrong. Like, it went up pretty substantially in 1 month. And then the non-farm payrolls for October came in negative 105,000 jobs. How is that good? Like, and so, gold and silver love uncertainty, right? They were trading down before that announcement, and then they both traded flat to up. And that's the kind of little stuff that we look for, reading the tea leaves, because the Fed is reading the same tea leaves. They're telling you this as an investor. They're like, hey, we're data dependent. Well, that's the data they're looking for, right? They're looking for job growth or waning growth. They're looking for GDP coming up next week. They're looking for CPI coming out this Thursday, the 18th. So we update people as that stuff happens and let them have a better understanding of where our sector is headed, right? So we always tie it into how this might affect gold, silver, or GDX, right? We're not just saying, hey, this happened and that's it, right? We're putting a couple of sentences out there that this might put pressure on our sector today, or it might be a positive thing. Secondly, we do the newsletter. We've had that for 4.5 years, the Feneck Commodities Report, and I have a YouTube channel named the Feneck Commodities Report. We interview CEOs there. My partner Don Durrett and I do that a couple times a month. And then lastly, we do paid calls. So if someone says, "Hey, my grandfather just died. He had $1 million in gold. I have no idea what I'm doing." Like, we don't provide buy sell advice, but we can at least help someone like that to maybe refer them to a dealer or have them understand where the trajectory of gold is headed, right? Like, so we do calls like that as well.
FeneckConsulting.com.
Yep.
All right, John. Well, thank you so much. What a fantastic conversation, especially, and I'll mention again, as you approach a major milestone with the Feneck Metals and Mining portfolio. Congratulations to you. 10 years, really, of navigating cycles in this sector is no small feat, and your perspective on gold, silver, critical minerals is incredibly timely and important and insightful, I will add. So thank you so much for joining us here on Stocks to Watch, John. We look forward to having you on again.
Thanks a lot, Ashley.